Good morning, everybody, and welcome to the November 11th issue of the Tucson Mortgage Weekly. I'm Todd Abelson. Thank you so much for tuning in. Well, as you're probably well aware, it's Veterans Day, so make sure that you hug a veteran today and thank them for their service. I remember growing up in the Vietnam War era, and veterans were spit upon, but in today's age, we're much more knowledgeable and sophisticated and realize all they've done to really help us. So make sure that you hug a veteran today. Okay. All right, well, that said, let's go real briefly. Mortgage news. Well, last Friday, the employment report came out, and if you recall, it was delayed because the government was shut down in October. Boy, it seems like a year ago that happened, but it was actually only a month. Well, the bottom line is that the market was all set up for a really weak number, and a blockbuster of a number came out. And nobody's really quite sure exactly how that happened, but not only did it come in at double what they expected, over 200,000 new jobs. But more importantly, they also ticked up last month's numbers. September numbers were up by 60. So that was quite an unexpected gain. And while the economy was really, really thrilled about that, the economic forecasts were thrilled about that, what it really did is the bond market and interest rates just took it on the chin. Bam. Because ultimately what that means is if the economy is doing well, then the government doesn't have to do the quantitative easing. If the government doesn't do the quantitative easing, that means that the free market's going to reign, and we're going to see a rise in interest rates. And what we did see is we saw a rise of almost 0.25%, in some cases 0.25% or more, in 30-year fixed rates on Friday, November 8th. Now, at the moment, it's Veterans Day. The market is closed, so we're certainly not going to see anything in the way of movement today, but tomorrow wouldn't be so quick to see the market give it all back or be helpful. So we may be trending back towards those middle to upper 4% rates again. And there's still the thought that the quantitative easing itself is going to extend into 2014. But the bottom line is it certainly was a strong number, and it certainly spooked the markets. At the same time, the unemployment rate actually only rose just a skosh up to 7.3%. Again, that's still a pretty good number. Now, going forward, here's the stuff you're going to start hearing about, because as much as it's easy to tell people what's happening today, it's what's happening tomorrow, what you need to be aware of. That's really what the importance is to be aware of, and that is the government Consumer Financial Protection Bureau has come out with a whole new set of guidelines for qualitative mortgages, and what that is that qualified mortgages, I should say, and that is there's going to be a lot of pressure on lenders in order to make loans to people that are truly qualified. And I'm sure, Petty, scratching your heads going, gee, didn't we do that all along? Well, yeah, we did, but somehow the definition got lost, and so we're back to basics. So you're going to start hearing a whole lot about that. You're going to see a lot of market concerns over how are we really going to implement qualified mortgages on a wholesale level. Well, keep an eye open for that in the weeks to come. There'll be some posts about that. Don't forget to check out the blog site, TucsonMortgages.com. I'm Todd Abelson. Make it a great day, and thank you, veterans. Bye-bye.